everyone, welcome to a new educational video for Elliott Waves, how to trade Elliott Waves, and this video is the second video of course and specialized for corrective waves in Elliott Waves. So how to trade corrective waves? Is it a good idea to trade the corrective one? We're gonna talk about it of course, and we're gonna start first to explain of course what are the corrective waves. Now in the first video the zigzag were missing because we were focusing on the motive waves. Now I realize that the zigzags are missing, so here we go, there he is there. So in the corrective waves we have zigzags, flats, WXY and triangles. So I'm gonna explain briefly each one of them. Now your zigzag normally is made of course of three waves, A, B and a C, and they should look kind of like a blitz like this one. Alright, so this is your zigzag where you have of course A, B and a C, and normally with a zigzag you want that your wave C touch exactly the one-to-one fib level of a zigzag. Here we go. And while your wave B should hit almost the 0.5 fib level as most common fibs for a zigzag, right? Now in your zigzag you want to see of course three waves impulsive, three waves corrective, and then five waves again impulsive. That means it is a pattern always made of 5, 3 and 5. If you want to trade a zigzag, the most less risky way is to trade your wave C in a zigzag. Why? Because you cannot really know if the wave A as an impulse is gonna be shorter or longer, especially after, for example, having a trend down with 5 waves big trend line, and now you're looking for a correction, right? So looking at this correction here, you can see that okay, we have 5 waves up, now 3 waves down. Then possibly when you see 5 waves up in a correction, then you want to see of course again 5 waves up at least. In that way you finish an ABC 535. The only possible way of course to make like a little bit profit from this is of course by trading the wave C, and of course as usual after your 5 waves up, 3 waves down, once you get to this level passing your 5 waves up, then you want of course to take your trade here, which is a very small part, right? And by the way, this is the most profitable pattern that you can have in Elliott Wave as a zigzag, because it has two impulses declaring that okay, this might be profitable after 5, 3, 5. This is of course the less risky way to handle of course that trade. So therefore in your corrective wave it is always preferably that you never trade it, to be honest. As a rule, if you want to put a rule for trading for yourself, never trade corrective waves. Never. If you don't want to risk your capitals, never trade corrective waves, even with a wave, small wave C. Now where to trade corrective waves? Only when we have big correction waves. By all means, if you are looking to a correction wave on the 4-hour chart, let's say, and you are looking for a zigzag, you have 5 waves up and then 3 waves down, and then you are looking for of course 5 waves up. Now you are on the 4-hour chart, okay? That means this is a big correction wave and not on the 15-minute chart, for example, because your 15-minute chart it will be very, very risky. On the 4-hour chart, of course, if you trade this, then it's gonna be a big portion of profit, right? While if you trade this on a 15-minute chart, this will be a very portions of profit and very, very risky based on the risk ratio and profit, right? Risk profit ratio is very, very small. So of course, don't forget, even when you enter a trade here, don't forget that your stop loss should be exactly below it, because if you are not impulsive after reaching this level, then you don't want to sink down, because this might definitely transform to something else. So this is your most profitable wave that you can have in a correction, which is a zigzag. Now the flats. The flats are very, very tricky, and it can trick you so much, which it can lead you to a very, very harmful losses. Starting by the flats. You have several flats. You have a regular flat where your wave A start here. This is your A, of course, and let's put it there. A, B, and a C. Your wave B is almost with the start of the A, or even a little bit with 5% lower, but not more. You want to see your wave C finishing exactly on the level of the wave A, or 5% more from the wave A. This is your flat. How can we trade this? We cannot trade it at all. Because if you want to trade this, first you have 3 waves up, then 3 waves down, then of course this is gonna be 5 waves up. However, of course this is an impulse. If it is on the 15-minute chart, the risk reward ratio is very, very, very big. So you cannot really trade this because it's very risky. Okay. If it is on the 4-hour chart and higher, then okay, you might want to take, after 5 waves up, 3 waves down, and 5 waves up for your wave C here, you might want to take this small profit on a 4-hour chart and higher, preferably. Okay. So this is for your flat. There is another flat, of course, which is an expanded flat, A, B, and a C. Your wave B is lower than the start of your flat. Is very much lower, at least 1.38, I mean maximum 1.38. And you want to touch here also as 1.38 or 1.618 as fib level. This is a very long impulsive wave in an expanding flat. Again, on the 4-hour chart, you want to trade only the wave C of an expanding flat only after checking 5 waves up, 3 waves down, and then moving up higher, entering your trade here. In that way, of course, your profit is bigger. And this is the most common flat or expanding flat that you can see on the charts. Is more common than a regular flat even. Okay, so this one could be also the most profitable wave in the flats for you. Okay, now one last flat is still in the pocket. Of course, after a regular flat, expanding flat, you can have a running flat, and here is the risk. When you are in a running flat, it starts exactly like the expanding flat. It starts, of course, with A, B. B is over the start, and you want to see a wave C towards the upside as an expanding flat. However, you took, of course, your trade somewhere here, and then boom. After a running flat, you want to see directly a very strong trend towards the downside, because it's a running flat. It means it is in a very hurry to finish the 5 waves towards the upside and move towards the downside directly. In that way, of course, then you are in a very high risk. Therefore, sometimes this expanding flat can be also risky. Therefore, don't forget your stop loss should be always under your entry point directly. And of course, you have to always accept your loss when a reversal happens. So these are the flats that you might face, of course, besides the zigzag. we have, of course, something else here as WXY. Your WXY, normally, it is a 3 corrective waves, right? Labeled as WX and Y. Normally, why we call a WXY, since we have already 3 waves as flats? Because the flats, in the flats, you always want to see a finished flat with a wave C. That means always a finished wave with impulse or diagonal, 5 waves, right? Always, we want to see a finished 5 waves here, here, as well here, right? As well for the zigzag, of course. Now, in the WXY, which is the most risky and untradeable pattern, is where you have, of course, a wave C that you think that is wave C, which it never ends in impulse. It can simply end in a zigzag, 3 waves. Let's say 3 waves up, 3 waves here, and then a flat or a regular flat for X, and then finishing this wave Y with zigzag. So you have WXY complex structure having a zigzag for W, flat for X, and zigzag for W again. And we call this, of course, a double zigzag WXY. Another way that this WXY can finish in is that starting with a regular flat, for example, then an expanding flat, maybe even like that, and even finishing here as a triangle, where you have a lot of choppy ways that you can never find any impulse to trade in it, right? So WXY corrective waves are very, very dangerous and risky. Never trade WXY because it could lead you, of course, for potential losses, right? So these are the most important patterns in WXY. Of course, it's still briefly, but yeah, of course, in summary, this is how it should look like, the things. Now, there is one more pattern. It is a triangle, and in the triangle, you want to see 5 waves which are ranging almost at the same area the whole time and going sideways, right? You want to see 5 waves marked as A, B, sorry, this is not the triangle, A, B, C, D, and E. This is your triangle pattern where you want to see, of course, the waves are contracting to each others, but in a sideways, not in upper wave or down waves, because that becomes diagonal, right? So this is your triangle pattern, and it's very hard to detect a triangle only after having your wave D, because if it starts here as A, B, you might think here, okay, we are say a 1, 2. There is a possibility of a diagonal 1, 2. There is a possibility of being zigzag, right? Or being a flat or something else. Therefore, you finish this wave here and you reverse. Then you think, okay, what is that? Oh, it looks like a regular flat, right? But maybe we are finishing something else here with this wave, and then we are 1, 2 again, right? So once you finish this and you reverse, then you will realize, oh, okay, these 3 points are matching together. These 2 points are contracting with those 3 points as well. Then, okay, I want to see last wave E and then reverse towards the downside. Of course, if your wave E is towards the downside, then you want to see, of course, higher prices. By all means, if your triangle is in that way, your wave E has finished towards the downside, right? This is your A, B, C, D, and E. Your E is towards the downside. Therefore, after finishing this correction, you want to move towards the upside, right? After this triangle. Never trade a triangle. Never trust a triangle, right? So, unless it is finished, right? Because once it is finished, you want to start an impulse. whether towards the downside or to the upside. You want to see 1, 2, 3, 4, 5, 1, 2, 3, and then move up. Here where your trade is. So this is in briefly how to trade, of course, the corrective waves. However, preferably to never trade corrective waves in Elliott Wave if you want to remain very in high profitable capital and portfolio. Never trade corrective waves, even for a zigzag. This is yeah, I am not a financial advice, but of course, preferably even to not to do this. And I mentioned, of course, this might be your most profitable wave. However, yeah, be careful that it can transform to running flat as well. So therefore, the risk is always there when we are corrective, very high and always there. To reduce your risk, always trade in a bigger time frame when we are corrective. So if we are on the 4-hour chart or on the daily chart and we are in a corrective wave, of course you don't want to wait months to enter trades here, right? If you see already with a 3 waves towards the downside, 3 waves up, you might want to see 5 waves up. This should be also 5 waves once you get the 3 waves and you pass it, and then you want to trade, of course, this part of this correction. So these are in briefly how to trade, of course, the corrective waves in Elliott Wave theory, of course. And yeah, be careful, guys, from trading these corrective waves. We want always to go impulsive or with the motive waves, which are much more profitable. So when I give signals, of course, on the charts with the videos and so on, now you know exactly how much still risky, even if when giving this wave. One more thing I would like to mention is that the wave B is always risky in a flat. So in a zigzag, it is very known after 5 waves up, 3 waves down, the zigzag, the most common FIB targets are always 0.5 and 0.618. This is a little bit less risky for a wave B, so you might know where we reverse and start our wave C, right? While in a flat, it is very, very hard to know exactly where you're gonna bottom, okay? Because if you are in a flat starting with 3 waves, all these flats start with 3 waves, even a WXY. So how do we know which flat is gonna continue for the next wave B? Can we know? Can we know that it's gonna be a regular flat or maybe an expanded flat where wave B goes very longer? Or it can be just as well a expanding flat and then turn into running flat. Or maybe it's gonna turn into WXY. So these are the things. Now you know why the wave B cannot be predictable, right? You cannot never predict a wave B after 3 waves A. So once you have 3 waves for A, it's very hard to get what kind of B. Is it longer, shorter, less or more than A? So this is the trick with it, right? So therefore, never trade corrective waves in Elliott waves. Always use the correction just to read the range that it happens on your chart, and then starting to identify an impulse after a correction. This is how the corrective waves are used for. Okay, so that was it for this video. Thank you for watching, and I hope that you like this content. If you did, please press the like button and leave a comment, of course, if you have any comments or note or a question. Of course, I would be glad to answer it. Thank you for watching again. See you in the next video. Bye bye.